Good morning. Good afternoon. Today is Wednesday, April 26th. The time right now is 3 minutes past noon. And let's do a bit of recap on what happened overnight, in New York trading. We can see for the first time in 7 trading days, we can see the market actually started to give us a direction. Yesterday, of course, we can see from the chart here, this is the 4 hours time frame in the Dow Jones. The Dow Jones actually came off on the back of some very disappointing earning reports, and of course, the consumer confidence numbers also did not give the market any kind of confidence in the marketplace, and that caused the market to actually came off on the relative basis a little bit sharp compared to what happened over the last 7 trading days. So we can see the lowest traded last night was 33,525.4 last night. So this is by far the most obvious directional pull so far. But I have mentioned all this while that the nearest support is probably lying somewhere around 33,275.6, and if this market cannot hold the next technical level, what we call a retracement extension, is may probably see the price move back to 33,000 levels. So this is the bracket of prices between 32,967.2 to 33,085. So this bracket of prices may provide some kind of technical support, although there's no obvious support anywhere near the chart point. Okay, but this is just a retracement extension expectation. So we'll see what happens as the market comes closer to 33,275, which is this nearest support. Over in the S&P 500, we can see that we also saw the market testing the most nearest significant support, which I mentioned all this while at 4,072. Okay, more, sorry, it's 4,069.8. So it did not quite actually, but it's basically right now sitting on it. So the fact that the market actually stopped falling yesterday is possibly proof that the market actually respect this level. But in the event if the market should continue to trade below this level, the next technical retracement extension point is 4,032 to 4,046 levels, which are listed here. So ideally, we want to see the market stabilize here and cause the markets to rebound one more time. But I say the upside potential is actually quite limited. So we will have to see how the market reacts. If the market goes deep below this level, obviously something else is happening. We will then take another look. In the Nasdaq actually suffered the most decline last night. It actually fell close to 2% relative to what the S&P and the Dow Jones have actually experienced overnight. So we can see there was an attempt to actually trade beyond the April high of 13,204, failed at 13,196, and then see market has come down. But so far it is corrective because it's 3 wave, and the nearest support is again at 12,518. Okay, so this level is nowhere near close to where the market last traded. So if the market cannot hold here, technically speaking, we may see prices dipping a little bit lower to 12,255 to 12,355 within this 100-point range. Hopefully the market can stabilize and see and perhaps encourage another run up in prices. We will have to see whether this is going to be the case. And over the Nikkei yesterday, we have a marginal high. Now on last Friday, we have a marginal high at 28,778, and I mentioned that this is possibly a reversal pattern. You can see this is a long-legged shadow doji, but the market actually attempt one more high and just to go seeking for stops and couldn't find stops anywhere above this level. The highest we traded was 28,806.7, and then it closed marginally high. But because of Wall Street week closing this morning, it gapped down and has been trading at the lower end of the range. Now, this could possibly mark the reversal point in which the market actually peaked at 28,806.7. And if this is the case, I think the market has the potential to actually continue to decline, okay, all the way to 26,850 levels at the minimum. So we will see what actually happens as the market unfolds over time. Over in Hong Kong, we can see Hong Kong prices actually sit on this nearby support of 19,509. The lowest traded so far this morning at midday is 19,520, and we have a bit of a reaction here. Now we will have to see whether by the end of the day the market can actually rebound off this chart point. Okay, if it fail to, then of course the next level to hold this market will be 18,829. Over in mainland China, we can see the market actually breached momentarily the March low of 3,935 with a low of 3,927, I believe, 925. Okay, so it it took out the market by something like 13 points, and then it rebounded. Okay, but we're only halfway through the day session. We'll see later in the afternoon whether this index here can actually hold. Obviously, this is the CSI 300, a major Chinese equity index. Okay, over in energy markets, we can see the energy slipped back from overnight high of $79.14 to trade to a new low for this series at $76.49. Now, obviously, this market down is doing these retracements, but has it damaged the overall rally in this market from $64.33? Not necessarily. I have been highlighting the possibility the market may actually slip back to entirely close up this gap that we saw on April the 1st, and this level is at $75.68. So if this is the case, maybe the market has a little bit more room to go, maybe another less than $1 left. Okay, then we'll see whether the market can actually hold here. Now, in the immediate outlook, if this is the low for this series, then the upside potential will be at $80. So $80 is going to be the immediate barrier to for this market to actually cross over. If we cannot cross over, then possibly we may see another leg down. Okay. The one that's actually holding the market is this thing called the natural gas. Natural gas has popped up this morning to $2.40, which is the highest it has traded since the market bottoms out at $1.95. Okay, so this is working out to be a very nice, potentially three-wave rally. If this is the case, the immediate target is $2.58 to $2.68. So anywhere, if this thing continues to extend higher, this is going to be the immediate bracket of prices which may actually halt this run. Okay, over in gold itself, we can see gold market is still struggling. The market has actually attempted to rally a little bit. The top side, possibly because this is a three-wave corrective rally, and you can see that it is struggling a little bit. And if this is the case, if market can somehow wriggle all the way to $2009 to $2015, that area could be an area of selling opportunity, because I think the decline from $2048.80, it doesn't look complete to me. It may actually do a larger three-way to actually target $1,932 to as low as $1,914. So this is the potential. If you sell somewhere here, let's see what's the high here that you can see. Worst case, you put your stop above $2,050. If you have a little bit of a higher risk appetite, then you can consider doing that. I may actually want to do that because I think this corrective pattern is quite clear to me. There's no momentum on the upside. So if the market has no momentum to go upside, it struggle, and then we have a reversal pattern within this bracket of prices here, that will be my signal to go in and sell this market. But I want to do half the size of my regular trading size just to be on the safe side, because this bullish momentum that we see in the gold market over a long term is still very much intact. It's still very much alive. So the whole thing is we're trading counter trend here. Now, over in the silver market, we also saw the market actually go lower to $24.50 before it rebounded. Again, this rebound looks like it has no momentum. If it struggled all the way to $25.30 to 48 cents, I think this could be an area of opportunity, because over the last few trading days, you can see that this area has been an area that it cannot surmount. Okay, so the market somehow struggle all the way there. This could be a great area to position a short. But again, like I said, gold, silver has been outperforming gold, meaning the rally in silver is a lot more persistent than the rally in gold. So maybe to sell, gold will be a better candidate compared to silver. Okay. Now, in the dollar itself, we can see the dollar has been trying to go up this morning. It went up to a high of 101.68 from a low of 101.93. Now, this pullback here was a little bit deeper than I like, but still it is a pullback because it sits at the 61.8% of the rally from 100.42 to 101.94. So now the market has already bottomed out at 100.93. We can take a three-wave extension. If this market at the bare minimum extend higher in a corrective pattern, then the target will be somewhere around 102.45 to 102.82. So this could be an area in which you can aim for. I'm already long, so basically I'm going to look to pare down my position. I have quite a bit of a long position in dollar index. Not the best of thing because I started buying dollar index quite some while ago, but I do add some more at the bottom. So I want to see if I can average it out and get out with my shirt intact. Okay, now sterling. Sterling has also not been trading very aggressively. We can see the market actually come back down from 125.07 all the way to 124.86 overnight, and if the market do rebound, I think market can actually attempt 124.30 to 124.50 levels. But again, there is hardly any other opportunity in sterling. So if you can avoid doing anything in sterling, then avoid. But if you want to trade knowing that the opportunity is not fantastic, the risk reward doesn't make sense to me, so just observe. Do not try to get into this market for the time being. Okay, the one that may actually be a little bit, that may provide a little bit more incentive to actually trade is actually the euro versus the dollar. Now the euro went up to a 110.67 this round and then come back down. If today we have a bit of a rebound, go back to 110 to 110.15, then this area could provide some kind of opportunity, because eventually I do believe this black color line that I draw in as a near-term support line may actually be breached. If it breach, then obviously the market may be targeting 108.30 immediately, and if this level cannot hold, my long-term target is 105.15. okay, this is the March low. Okay, now Aussie does not provide much of trading opportunity. It has already fallen a lot deeper than what I thought it would. Okay, initially I thought it's going to be a three wave, but it has punched through the three wave equality move, and now it's heading straight for the my target all the while, which is 0.6565. okay, so this 0.65 is actually the low traded here. Okay, so you can see over here. Okay, now in dollar yen, it is also struggling in a very corrective rally. So you can see the bottom here, 129.64. It has struggled all the way in a multiple three wave to 135.14 before it slides back. Now this pullback from 135.14 is also corrective looking. So if today we get another rally attempt, maybe the top side is 134 to 134.35, and let's see what happens. If the market can actually break out of this rising channel here, then I think there's a very good chance it will target 129.65. Okay, which is still my my medium to long-term target here for this move. Over in dollar Canadian, we have a very persistent rally. It looks like at this point in time, it's still trying to edge higher. We have this morning high, we have 136, 48. Okay, and this market looks like it wants to extend higher. There is no more barrier in between all the way until 138. So there is a possibility market will just continue to chart higher. But if we get a pullback, okay, not very high probability for now, but if we do get a pullback, maybe 134.75 to 135.15 is going to be where you can pick up some long position. So otherwise, there is no near-term entry for you to actually engage this market. Now over in Bitcoin has a bit of a push this morning, surprisingly. Okay, earlier on I did over the last few update, I've been telling her there's a possibility it looks like it's going to unfold in a 5-wave pattern. So this could be part of the 4th wave, but for this to be a 4th wave, it must not overlap this $29,122. okay, 29,122 represents the bottom of the wave 1. So in a classical 5-wave decline, in which this one may look to be the case, then it must not overlap the bottom of wave 1. So the key area to watch will be $29 and 29,122. However, as a market punch higher, the retracement point in which I think the market will come under some kind of pressure will be at 28,530 to 29,000. So again, we are very, very close to an area in which possibly we may see selling interest re-emerge. Okay, we'll see what happens. I'm basically long. So right now I'm trying to get out of my long position. Hopefully the market can go a little bit higher into this bracket of prices for me to get out of my long position. Okay, it is very, very near to my entry levels, so maybe I hope to get out with no loss, and this is the best I can hope for now. Okay, in the meantime, okay, tomorrow I will be in Kuala Lumpur for the weekend. I'm going there to receive an award, and tomorrow update will be a little bit late, possibly upon my check-in into my hotel in Kuala Lumpur afternoon. Okay, so tomorrow update will be a little bit late. So in the meantime, take care and be safe. Bye bye.